Yesterday's CPI number, followed by today's PPI number, have the markets in a whirl. And in today's video, I'm going to be giving you an updated view on some of the markets that I am personally watching, some of my trades, an update on gold, an update on oil, an update on stocks, all of it here now, and what to look forward to going into Friday's trading. So thanks for joining me. Let's go ahead and get started. So first up, let's take a quick look at the overall market right now. What you can see is that there's that big CPI number that came out yesterday, hotter than expected. Stocks didn't like that across the board. You had the NASDAQ, the S&P, and the Dow all down yesterday pretty strong. But this morning, the consumer price index shot it down yesterday. The producer price index rebounded a little bit here at the time of recording. You can see, you have a little bit of resurgence in the S&P and the NASDAQ. The euro trading kind of all over the place here this morning. We did hear from the ECB, as well as, of course, that producer price index data causing the euro to initially spike higher. Pound dollar also up. Gold is trending back higher. We're trading at 23.46 at the time of recording, and oil seems to be sliding a little bit this morning. And up first, let's talk about this dollar move. So yesterday you had a massive jump on CPI data, which, if you want just the high level breakdown, essentially inflation came in hotter than expected. And the market didn't really like this. Of course, people who are long the dollar loved this because it means that the dollar looks strong relative to its peers, because higher than expected inflation suggests the economy is really strong. There's a lot of demand from consumers, and that's why prices continue to keep going higher. And at the same time, it might mean that the Fed may not cut rates. In fact, I've got some data for you, so let's check that out. So what you can see here is the month-by-month probabilities based on market expectations for interest rate cuts. This has been all the rave in recent months and the last year or so, is when is the Fed going to officially start cutting rates? At the beginning of the year, you might remember that a lot of people thought there was going to be a cut as soon as March. March has come and gone, no cuts. April come and gone, or well, not gone, but it's not going to see any cuts. And May is now unlikely at all to see rate cuts. You can see we are expected to hold interest rates at a 97.4% chance in the month of May. And then, following that, June, still, now we're seeing a 79% chance that we're going to hold interest rates steady for longer. And then you can keep going down the line, 51.3% chance we see it hold in June. Now the question is it going to be pushed back all the way out to our first rate cut in September? Now, again, this has been pushed back over and over, and this is just showing how, emotional and how volatile markets really are. This expectation has gotten pushed back from March to September, and the market is still relatively high going into this year. It's had a massive run up. So is this going to challenge the S&P 500's position? Is this going to mean dollar strength is the new norm again? Let's kind of break that down. So this chart tells you a very important story, and I wanted to break this down for you. So check this out. I've got the European inflation, I've got the UK inflation, and the US inflation all on the same chart for you. Now, the blue one is, again, the US inflation. You can see it just came out and it actually rose. So this is starting to look a little bit dire for people who thought, interest rate cuts are coming soon, because right now what you see is US inflation continues to stay sticky. It's not going down. And if you take a look in relative basis to the euro, you can see Europe's inflation has been trending down overall pretty nicely. Now, with that said, they're also experiencing a slowdown in their economy, whereas the US is seeing some signs of weakening, but overall, the US economy seems to be outperforming its European peers. That's nothing new. That's been kind of a theme for some time, in fact, decades for that matter. But this stubbornness in relation to the two's economic outlook could lead to USD strength. Why is that? Well, it's because the US dollar may experience strength because the Fed may not cut rates for a while, whereas the ECB and the Bank of England, right, the European central banks, they may look to start cutting rates to start to stimulate their economy if their economy continues to slide. that makes the dollar look really strong because they're starting to be more stimulative, meaning more money injecting into the system. So more money, more supply of currency, whereas the US continues to be restrictive. So that divergence could cause some very interesting thing for currency traders. And I think that's a good argument for why the dollar looks relatively strong right now. Now for currency traders, the Edge Finder also breaks down not just inflation, but several other key metrics. Things like employment data and services and manufacturing PMI numbers and the economic, the financial market trend, the seasonality, retail positioning, commitment of traders data. The Edge Finder packs it all into one algorithm, and a lot of sites and services will give you some data. They'll show you a little piece of it, but the cool utility of the Edge Finder is it brings it all into one thing, and it actually generates bullish and bearish signals on this data. Now, of course, these signals are meant to be used in combination with your own trading strategy and risk management, but having a tool to help isolate fundamental data for you is incredibly convenient. I also want to mention that this current month, we are doing a 45% off discount on this software. This is the biggest discount that we do all year long. And if you'd like a copy for this massive discount, there will be a link down below in the description. It's the very first link in the description. It will take you to a chat with us location where you can speak directly with a member of my staff about getting a copy at this huge discount. Thank you for being a subscriber, and there's your extra discount while it lasts. So the dollar continues to explode higher here today. We've entered into a bit of a range-bound market. In fact, I'll do some markups here. So what we can see is we've got support on the hourly chart, just shy of where we exploded higher yesterday. Now we're at the top of this range at the time of recording. If you get a break above this, I say that's up and away for the dollar. If we can get a strong close outside of this range, that would be just continuation patterns. Now, if you do get a pullback, again, I think there actually might be dip buying opportunities. As you can tell, I am mostly bullish on the dollar right now until proven otherwise, right? So if I'm looking at the dollar from perhaps a 4-hour perspective, let's clear the chart and I'll show you what I'm looking at here. So here's your 4-hour chart, and what I'd be looking for in terms of pullback opportunities would be, you can already see, look how strong demand was here. Price wicked down intraday and found support very quickly. So let's see if that pattern continues to hold. Another level of support that could be worth watching out for as well would be this pullback here, which I think might actually be even beyond a 61.8% retracement. Nope, right around 61.8. Perfect, right on the dot. So if you do see a pullback to either one of these levels, this is a more aggressive area, I think, for dollar bulls, and a more conservative one could be a retest of that 104.4 area of support. So again, dollar looks strong until further notice. Economic data seems to be showing outperformance in the US, spotted by, like I said, the Edge Finder. So I'll continue to watch these close. Here's a look at the S&P 500 on a 4-hour chart basis. What we can see is that there seems to be a bit of stubbornness from the sellers who won't let this thing rise. You can see we've had several attempts to go higher, followed by big economic data pointing lower. With all of this strong, economic data, you might think, well, why isn't the stock market rallying? Well, again, it comes back to the Fed. If interest rate cuts are being pushed back in terms of their expectations all the way to September, the stock market, and especially pockets of the US economy that are more sensitive to interest rates being higher because debt is more expensive, because liquidity is not as available, it's harder to raise capital. These things can be restrictive to company performance. Now, the S&P 500 has a bunch of big names, so they're less sensitive, arguably, to higher interest rates. But let me show you an area of the market that is much more sensitive to rate hikes or higher interest rates. It's the Russell. The Russell yesterday had a really big slide, down 3% at one point, bouncing back slightly here on the day. But for the most part, you can see Russell really not going to like any sort of interest rates staying higher for longer narrative. Now, I do need to give an update on my gold position. I am officially all out of gold. I closed for around a 18.5K profit. So for those of you guys who stuck around for the whole trade over the course of my videos in the last few weeks, it's been a long trade. I've been in this trade, or I was in that trade since late February through March. I added a second position in March and just rode that thing all the way up. It was an amazing trade, and I only wish I had more of them to speak of. That being said, where am I at currently with gold? I think it's due for a pullback, but I'm not shorting it, and I don't think that selling it is in my best interest. So when I say that, what am I buying it then? Well, here's the solution. Let's take a look at, again, the data. I don't take trades based on charts alone. As much as I think technical analysis can be useful to traders, I don't think pure technical analysis only really gives you a full picture of the financial markets. Charts can do some wonky things. They can blip all over the place, but really fundamentals are truly what the force behind the moves truly are or lack. So when I look at gold, what I can see on the Edge Finder is currently gold is giving me a neutral reading. So I'll wait for this to give me bullish or bearish in that case for trade setups. In the meantime, let's take just a quick look at the technicals. You do have support around here. My stop loss got triggered right around here. So you could make an argument that I was treated like liquidity, but I'm more than fine with that. I ended up closing a 19-to-1 risk to reward trade, which I wish, like I said, I had more of those to speak of. Anyways, resistance is overhead here just at 23.58. Let's see if price can break. I'd love to see it. I'd be happy for the bulls out there if we can continue to push higher. Why am I out of this? Why am I neutral on it? Well, again, economic data coming out strong for the US dollar is as a headwind for gold. That's not necessarily good. If you had cool PPI numbers, gold probably would have ripped through the highs. That being said, we didn't get that. We got, hotter than expected consumer price index numbers. And this morning, PPI coming in cool is good for gold. But again, not as impactful as CPI. So I'm going to continue to stay on the sidelines for now with gold until I get some more confirmation from my software. In the meantime, I am also long oil. This is still a trade that I'm in. So this one is not over. Take a look at USO. Though it is pulling back here today. If we break support, that's going to be my signal to go ahead and hop out of my trade. And you can see, I don't know if you guys do this too, but I recently, I've been playing with my chart settings again. I think I'm back to extending right on my support zones and my resistance zones. Before I was just doing it where I would just pull it out here. I don't know if this is making sense to you guys, but if it is, let me know. Do you guys, can you guys just chime in on the comment section? Do you guys like extending it right like this, or do you like not extending it right and just keeping it like, I'll show you how you can do this really quick. So go here, go style, and then take this extend right. Do you like to extend it right or no? I think I'm back to extending it right. I think it looks nice. Anyways, US oil, this is the spot price of oil where I do some of my analysis. So I've entered into this trade back here. Stop loss is just below this wick low. If it does break it, I'm out of the trade. And we'll go from there. And here's a list of my current positions, everything from some ETFs that I'm trading with the wheel strategy. TLT is going very poorly for me with of course yield spiking dramatically. The value of bonds has gone down, and hence my TLT puts that I've sold are looking like I might get assigned, which is okay. Part of the wheel strategy is getting assigned sometimes and then selling covered calls against your position. Anyways, if you would like to learn more about my options trading strategy, we'll pin a video in the top right hand of the screen. And also, if you'd like to check out the brokerage that I'm using, I use WeBull, which is actually going to be pretty soon offering stocks, options, and now even futures. So this broker is amazing. I've used it for years. It's where I've done all of my, my ETF trading for things like gold and oil and the NASDAQ and the S&P. And I also am able to trade options in the same platform. It's very convenient. If you'd like to check out WeBull or some of the other brokers that have some special sign-up perks available to my subscribers, check out the links down below in the description. These are referral links, so you'll be helping out the channel, but I want to mention that there's Eightcap, OANDA, WeBull, but if you use the specific links that are there are special perks for you as subscribers of my channel that we've set up for you. With that said, guys, thank you very much for tuning into today's video. Trade safe, and we'll see you tomorrow. If you're looking to improve as a trader, we've got some cool free resources here that I wanted to share as we close today's video. Down below in the description, there is a link to join our Discord channel or our Telegram channel. And we also have our website, a1trading.com, where traders can get access to free course material to help you improve as a trader. Remember, we are also live Monday through Friday on this channel around 9:30 a.m. US Eastern, broadcasting most live news events and that sort of thing. So hope to see you there. And also, we do have a couple videos videos here showing up on the screen. If either of these seems like it might be helpful to you, then make sure to click here or here, and we'll see you there.